Asia Currencies hit 7-month high on Goldilocks, U.S. scenario. August 19, 2024. Here are 5 main key factors why Asia Currencies hit 7-month high. Key number 1. Strengthening Asian currencies. The Bloomberg Asia Dollar Index gained as much as 0.6% on Monday to the highest since January, indicating a broad strengthening of Asian currencies against the US dollar. This trend was led by the South Korean won and the Malaysian ringgit, reflecting positive growth prospects in the region. Number 2. Political stability in Thailand. The Thai baht benefited from the resolution of political uncertainty as Paetongtarn Shinawatra secured enough votes to become the next prime minister. This development helped ease concerns about a prolonged political vacuum. Number 3. Economic growth indicators. Malaysia's ringgit strengthened due to a stronger than expected GDP growth report and increased global fund inflows into its stock market. This highlights the importance of economic indicators in currency movements. Number 4. Reduced U.S. recession fears. Goldman Sachs economists lowered the probability of a U.S. recession, citing better than expected retail sales and jobless claims data. This easing of recession fears is positive for Asian economies, particularly those that are export-oriented. Number 5. Fed rate cut expectations. The expectation that the Federal Reserve will cut interest rates by 25 basis points at the September policy meeting is also influencing currency markets. Traders are looking for clues from Fed Chair Jerome Powell's speech at the Jackson Hole Symposium regarding the future path of monetary policy. Now let's dive in. The Bloomberg Asia Dollar Index surged up to 0.6% on Monday, reaching its highest level since January. The South Korean won and Malaysian ringgit led the regional gains, fueled by optimistic growth outlooks, while the Thai baht rose amid easing political tensions. We're seeing a Goldilocks scenario, where concerns of a U.S. recession are diminishing while growth momentum in Asia remains moderate, said Christopher Wong, a foreign exchange strategist at Overseas Chinese Banking Corp. This environment provides room for Asia ex-Japan currencies to recover, especially with developed market central banks leaning towards easing. The ringgit strengthened by as much as 1.5% to 4.3678 per dollar, marking its strongest level since February 2023. This comes after Malaysia reported a stronger than expected increase in second quarter GDP on Friday, with global funds flowing into its stock market at the highest rate since June. The Thai baht extended its gains to 34.409 per dollar, the highest since January, following Paetongtarn Shinawatra's victory in the parliamentary vote to become Thailand's next prime minister. While her appointment has helped ease concerns of a prolonged political vacuum after her predecessor was ousted by the Constitutional Court, the baht's future path could be volatile amid reports that the new government may cancel a $14 billion digital cash handout program. The relationship between the new government and the Bank of Thailand will also be closely watched, especially given the new premier's previous criticism of the central bank. Goldman Sachs economists over the weekend lowered the likelihood of a U.S. recession in the next year to 20% from 25%, citing better than expected U.S. retail sales and jobless claims data from last week. They also expressed increased confidence that the Federal Reserve will cut interest rates by 25 basis points at its September meeting. Easing recession fears in the world's largest economy is a positive development for Asia's export-driven nations. The South Korean won rallied 1.5% to 1,331.35 per dollar, its highest since March, while the Philippine peso surged 1% to 56.66 per dollar, marking its biggest gain since November. The yen advanced by as much as 1.2% to 145.87 per dollar, as traders awaited potential signals from Bank of Japan Governor Kazuo Ueda on the central bank's rate hike trajectory during his appearance in Parliament on August 23. Meanwhile, the Bloomberg Dollar Spot Index slipped 0.3% as traders looked ahead to Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this week for clues on potential rate cuts. A gauge of demand for bullish call options versus bearish puts on the US dollar showed traders divided on the direction of the currency, having favored bets on a stronger dollar for much of the year. Regional equities also saw gains on Monday, with the MSCI Asia Pacific Index rising nearly 1%, heading for its highest close in a month. The market is anticipating a brighter outlook for Asian economies in the coming quarters, said Tomo Kinoshita, global market strategist at Invesco Asset Management Japan. He expects more investors to shift funds into Asian equities, particularly in India, Indonesia, and Malaysia. Thanks for watching. See you in the next one.